Good evening, ladies and gentlemen. It is Friday, the 22nd of July, 2022. Welcome to Hindsight, where we take a look at the trades that we've taken today and we discuss what could have been done better. Now, we've got INR here. We've got the announcement for this stock, and I want to dig right into it for the fundamental basis or the sort of thought process behind the fundamentals and how that'll translate intraday. Now, this has a binding offtake agreement with Ford. That's one component, and the second component is the offtake itself, which is how much it is. That's 5 years, which is great. It's a nice duration of time, but 7,000 tons per annum. Now, I wasn't quite sure about lithium carbonate because I've traded a lot of lithium offtakes, but I'm guessing those were lithium hard rock, right? Like spodumene. And anything under 100,000 tons per annum tends to get sold off. Anything between 120 to 150,000 tons per annum tends to really perform well. So I hadn't traded lithium carbonate, or at least I don't recall if I've ever traded an offtake for lithium carbonate because 7,000 tons per annum sounded quite small. So I looked at the price for lithium carbonate. Turns out it's roughly anywhere between 8 to 12 times more expensive. So all I did was multiply 7,000 tons per annum by about 10, which gave it an equivalent of about 70,000 tons per annum equivalent for hard rock. Now, I didn't know for sure that this was a good way of doing things, but I at least had some expectations of what the market might do. So we've got an announcement that typically would perhaps rally for a couple of minutes and then sell off if it was hard rock or 70,000 tons per annum of hard rock. So in this case, I treated it the same sort of way, except I sort of took into consideration that this was done with Ford. Of course, any micro or small cap company that does a deal, any kind of deal, and mentions a larger company like Microsoft, Ford, Tesla, they tend to perform quite well on the match and the open. But the other thing that INR has going against it was 2 billion shares on issue. And this is something I tweeted about this morning, which made it a little bit difficult, right? If the shares on issue was a lot less, like we're talking 500 mil to 300 mil, yeah, this would have rallied no problem on the opening drive. But 2 billion shares on issue, if you guys have been watching my content at all, you know that the high shares on issue makes everything fucking difficult to go to the upside. And if it does go to the upside, it'd grind and then pop after about 15 minutes or so, maybe rally for another 15 minutes and then come off from a key level if the fade play was in fact the play for the day. And that's what this was, a fade play of some sort. I took this announcement as not a guaranteed, but like a very high probability of selling off, especially with the shares on issue. So 2 billion shares on issue and an offtake agreement that didn't meet my requirements for a rally. And when I say for a rally, I mean for like to be green at the end of the day, to close higher than it opened, basically, is what I'm trying to say there. And if we look at the daily chart, there's a very clear target as well at 58 cents, as you can see in this horizontal here. I thought for sure there'd be no problems after opening at 55.5 cents to getting to that level. I thought maybe consolidate and then rally, come off. But instead, 2 billion shares on issue in July. I think that's one thing I didn't consider was the illiquidity of July and not taking that into enough consideration to sort of go hard on the short a little bit earlier. So I'm still happy with this short anyway. I got it at 55 and 54.5 here. And I did say one tick stop, but that was incorrect because the opening price was 55.5. Closing out at 55.5 would have been terrible because that is the opening price. That is typically where all the volume on match is. And usually match has a much higher volume. Sorry, this is match. My apologies. This candle here. So all that volume typically is at match. So that ends up being a level of resistance rather than just going for this break of range here, which as nice as that is, it's only one tick away from the open price. And to me, that is far more of a significant level to hold than the break of range, which is only one tick away here. So building the short position, 55, 54.5, and just holding it for the day. I got out at 52.5. I can't recall exactly where, but it was somewhere after 11 o'clock here. It just wasn't continuing the sell-off. And so I sold half and ended up closing out half again at 51.5 and called it a day. So a very straightforward trade. Once it sort of broke down, the expectations were a little bit choppy, thinking that it might rally, but that's okay. It ended up working out in the end because I had a short bias, understanding that this gap up was large enough to short into at some point today, based on combining the fundamentals, the stock information such as shares on issue and stuff like that. And this is a nice sort of $1.1 billion stock as well. So enough room to the downside. SYR had a very similar announcement. You can see the exact same thing happened here. Some sort of announcement with Ford. It had much less shares on issue, and it had a much sort of significant drive down. So I think this might have been a little bit better to trade. I'm not entirely sure. But with 2 billion shares on issue, the order book was stacked. There's like 500,000 shares on the bid and ask, and it's really easy to put on size, I find, for stocks that trade like that with that thick sort of order book. And so that's SYR. Sort of didn't really touch that because I was more focused on INR because of the high shares on issue. I felt it was safer to short. And moving on to BRN. Now this one was sort of a flop for me today, unfortunately. We'll go over yesterday's trade because what I got here is the daily chart. We've got some nice key levels here. This sort of pop. I can't remember exactly how much I trade. I got very little out of this day here. The target was $1.10 on the rally. But more importantly, I'll bring up the 1 minute chart for the day before. So what we have, and this is on Thursday. So you can see where it closed. It opened here, popped for a minute, came back down, and to me that was just buy, right? There was this horizontal level here, intraday from the day before, and BRN was on a sexy uptrend on the daily chart. So to me, it was buy the dip, right? I bought on match, bought the dip. I can't remember exactly the price. It definitely wasn't the very bottom, but it was like $1.12-ish. All I know is I had multiple buy orders as it was sort of holding this level. And once it broke to the upside, I know a couple of guys on Discord ended up sort of buying the retest as well. So as the stock came down, they bought at this level here, which in my opinion is just perfect, correct technicals, and then just letting it rally to the upside. Now the target here was 119.5 and 119 for me. Didn't end up getting 119.5, which was the drive to the upside. Got it out at 119, no problems. I ended up dipping and then coming back, and I didn't want to mess with it too much, so I got 118.5 on the move back up. In this kind of environment, it's very hard to justify, I find, holding beyond 11 o'clock, right? And it just hit 11 and it was coming off, and I thought this might have been the top. It'll probably pull down and just chill out at this sort of level here at 115. It turned out okay, actually consolidating for most of the day and having just a little bit of a pop to the upside. So real solid strength. Keeping that in mind, if I show you guys the chart up until this morning. So if we hide this morning's candle, you can see there's a level here, horizontal, a pivot point at $1.23 or $1.22.5. So that was a key level for this morning that I was paying attention to. You can see also the volumes are really nice. There's kind of like a ladder of volumes or a stepping stone of volume. And I was expecting a nice volume pump if it held $1.25. That was kind of the key level. I was expecting sort of a volume pump like this, something in my maybe like 50% larger than yesterday's volume, and then push to the upside and maybe touch this $1.35 level and maybe take profits a couple of ticks sooner than that. But as we see on the open, didn't quite pan out very well. This was where I was trying to hold the level as it came off. Took a little bit on match just because it was gapping up so nicely. Tried to hold this level at 122.5, added on at $1.20.5, and to my detriment held to $1.18. So I think I might have held on a little bit too long. I was talking about this quite a fair bit today on Discord about what the correct idea was And for me, it was always buy the dip because of the daily chart. So I'm not so sure it was the incorrect thing to do. I think sizing was appropriate because the idea was buy and add here. And then if it dips, buy and add here. Or if this holds and swings to the upside, start buying in anticipation of breaking the opening range. So $1.24.5. So either way, the orders that are here ended up being bought down here. So it was a bit of a front side, but it was kind of the same mentality and idea that I had of holding this level here. The problem is once this level broke, that probably should have been the signal to sell. Maybe save me 1.5 cents on this trade, because I was trying to hold this 118 level or 118.5 level, and it just wasn't as obvious. It wasn't as clean. There's always an excuse to, hey, what about this 116.5 level? You can't, or rather I can't find myself holding through the entire move to the downside, which, I've got to set sensible stops. Can't just keep adding on and then just getting bloody murdered to the downside. So risk management, I think ultimately it was okay, but maybe not do more than 2 levels. So, hold the first level, hold the second level, cut, rather than hold for a third level. Even though I didn't add on here and cut here, it's, I think it's an okay trade, but I think it could have been done better. I think next time there'll only be 2 levels to hold and then cut. I'm not too sure about the idea of this opening range breaking and then cutting. So I'm not too keen on, cutting here, reopening here, cutting here. I'm still in 2 minds about which is actually the better idea. So I don't think I traded that one optimally, and I really do think at the very least stopping out sooner would have been better for that sort of trade. I had in my mind that this was a goer, but I kind of held on a little bit too long, I think. So that's the problem for that one. Also for BRN, the reason to go to the upside is, the Nasdaq's doing well. SMH, which is the semiconductor, and I know it's BRN's a AI, but just looking at the tech sector of the US market, it's very healthy. It's booming to the upside. So BRN is definitely on my watch list for Monday. I guess you can see it's kind of, whoops, it is now in sort of a range here. Probably not actually. It's, I don't know. Look, I'll see on Monday and see what happens. Key level is now $1.20.5. And even better if it breaks through 122.5. These are sort of 2 key levels. Opening above it and holding it, I would try and defend it. And then this time I'll have a tighter stop, maybe 119.5. And if I get wicked out and it starts swinging back to the upside, so let's say it opens up here, I buy it here at the blows, get wicked down, and then it rallies. Not too concerned about that. Happy to take the loss, but catch it on the way up as well to make up for it. So, 101 different ways you can trade on Monday, but that's just my line of thinking. I want to see some strength. I want to see a break of 120.5. This is a key level, and even more important is 123.5. If that breaks on Monday, that is definitely my consideration for an add-on point as well. We also have ZipPay here, and I'm going to bring up Affirm as well. So Affirm rallied about 14% the other day, which sort of helped the sector as well. You can see the breakout sort of occurring well before Zip does. And it's kind of leading in, I think it's leading in the momentum for ZipPay. As you can see, the same or very similar setup. This really should have been the signal to pay attention to. Clearly higher highs. I mean, this is all just noise and setup. It's just bouncing off key levels. It kind of held this level here at 49.5 or 50 cents for whatever reason. There's no clear technicals that I can see that qualify that. But anyway, I guess you could call it a pop, break into new highs from these levels, and then the low volume sell off. But it's all well and good in hindsight, seeing that in real time is another story. But I guess if I paid more attention to it, you could see it's basing, and then the retest, and then the consolidation here. It's lovely as a setup. Seeing it from this perspective here, that looks really nice. And then that's just the go ahead. It's all well and nice in hindsight, but didn't really pay attention to it, which is unfortunate. And whoops, pressing the wrong buttons there. This one I did not touch intraday. I was watching it. It was on my watch list, but I don't know. I was too preoccupied by other stocks, and I didn't think it was going to move as strong as it did today. So, and there was an interesting sort of move as well the day before, and this is where I was watching it as well. This was on Thursday, and it was this move here where it opened up and got mauled below sort of key levels, the closing price and all that, and just got mauled. And I think I just stopped watching it after that. And well, there you go. There's just an absolute stonker to the upside. So intraday, you can see kind of the levels here where it tried to push up again through 92. I think a dollar magnet is reasonable here. How it gets there is the question. Whether it pulls back, can't really particularly see a level intraday for that. Daily chart, it's not as evident either. But Monday is definitely worth watching for ZipPay. There's probably a key horizontal here, which it's around $1.07 historically. So dollar's always going to be sort of the target here. You've also got a horizontal 98.5. So that's going to be 98 cents. That's going to be the first target. 98 to a dollar. That's going to be a key level, I think, in some point in the future, whether it's Monday or just sometime next week if Zip decides to do a little bit of a pullback and then maybe rally again. It's definitely worth watching Affirm overnight and the NASDAQ, see where these guys go. If Affirm stonks to the upside, then definitely Zip is a goer for Monday, a potential goer, I should say. Otherwise, I think that's pretty much it. Hope you guys had a good week so far. It's been a little bit rough because it's July, at least for myself. We'll see if things start picking up. I did a video on ZipPay and its fundamentals and its fundamental value. So I think people are just, maybe recognizing that this market capitalization, it was about 400 mil a few days ago. Now sitting at 610 million. It's about half the equity. So I don't think it's unreasonable to hit this kind of level here at $1.70. And the question is, how long does it take? And it's purely on a technical basis. Fundamentally, you got to consider that, out of the 1.2, 1.1 billion in equity that they have, 800 million is in goodwill, which is a pretty sizable chunk in goodwill. But if you don't care about that kind of stuff and you go, hey, it's got 1.2 million equity, then I think it's a terrible long-term play because the financials have been pretty sub-average. The quarterlies come out, I think, on Thursday. I didn't actually read the quarterly, so I might have to go through that again. But, the numbers historically have just not been getting better. They've been getting worse, and the burn rate's been pretty bad. And you can check that out in my other video on Zip, my previous video before this one. And you can see that the business model isn't really working out for them. So that doesn't mean this can't move in the meantime. So technically it can bounce. So that's that. I'll catch you guys in the next video. Cheers.